Good day. Welcome back to our income taxation class. Once again, I'm Teacher Lei, and today we're going to discuss tax on partnerships. For the overview of the chapter, we're going to define partnership. We will determine the different kinds of partnership, the different tax rules on general professional partnership, and the tax rules on other partnership. According to the Civil Code of the Philippines, in Article 1767, the definition of partnership is by the contract of partnership, two or more persons bind themselves to contribute money, property, or industry to a common fund with the intention of dividing the profits among themselves. In here, there are two or more persons which may form a partnership for the exercise of a profession. Now, there are different kinds of partnerships. We have the General Professional Partnership or GPP and other partnerships or what we call partnership in trade. Let's define first General Professional Partnership. When we say General Professional Partnership, this is a partnership formed for the purpose of practicing a common profession and no part of the net income of which is derived from engaging in any trade or business. Now, from the definition, we can derive the three elements of a general professional partnership. First is that the partners have a common profession. So, pareho dapat yung profession nila. Next is that the purpose of forming the partnership is to practice the common profession. And third is that no part of the net income is derived from engaging in any trade or business. So, ang pagpapractice lang ng profession ang purpose why the general professional partnership exists. Now, let's take these cases. Let's say we have Andre, a certified public accountant, and Alexia, a certified public accountant. Both Alexia and Andre are certified public accountants and they want to go into a partnership of auditing clients. Now, in this case, the partnership to be formed is considered a general professional partnership since both individuals or both partners have a common profession and the purpose is to practice the common profession, which is to audit clients. Okay, let's have another case. Let's determine if this is a general professional partnership or not. Let's say that we have Jack, a lawyer, and Dimitri is also a lawyer. They want to put up a law firm. Now, in this case, since both have the same profession and they want to practice their profession, which is to put up a law firm, and that no part of the net income is derived from engaging in any trade or business, the partnership that is formed in this case can be considered a general professional partnership. Okay, let's have another one. Here is Bill, a lawyer, and Amara, a CPA. And they consider that they can have a good partnership by getting clients, so they will process land titles of clients and other business concerns. Now, in the partnership that will be formed by these individuals will not be considered a general professional partnership. Why? Because Bill is a lawyer and Amara is a CPA. Although they will practice their profession, they do not have the common profession. Bill has a different profession from Amara. And this partnership cannot be considered a general professional partnership because it does not meet all of the criteria set for it to be considered a GPP. Let's have another one. Let's say Jayus is an architect and Joy is an engineer and they want to build buildings. They want to practice their professions. What kind of partnership will they form? Will it be considered a general professional partnership? In this case, it cannot be considered a general professional partnership because again, both the partners do not have the common profession. Okay? In order for it to be considered a general professional partnership, both partners must have the common profession. Okay, let's have another example. Here is Althea, a certified public accountant. And Jim is also a certified public accountant. They are also interested in making computer softwares or accounting softwares. And they want to put this in the market. So both are experts in making accounting software and they decided that they could make a good business out of it. So they decided to form a partnership and sell the software in the market. Now, is the partnership formed by Althea and Jim be considered a general professional partnership? Let's analyze. Althea is a CPA and Jim is also a CPA. Both have common profession. Okay? They want to practice their common profession by making accounting software. So, number 2 is met. Now, in selling this accounting software, they will make a profit out of it. So, the partnership is already formed to practice trade. So, in this case, although both have common profession and they want to practice their profession, this cannot be considered a general professional partnership because the net income is derived the net income of the partnership is derived from engaging in trade or business. So, from this we can say that for a general professional partnership, they must meet the 3 criteria. Partners have a common profession, the purpose is to practice the common profession, and that no part of the net income is derived from engaging in any trade or business. So, dapat present tong tatlong ito for it to be considered a general professional partnership. Now, there are tax rules on general professional partnerships. Okay? A general professional partnership is a partnership formed for the purpose of practicing a common profession. And this general professional partnership is not subject to income tax. But the individuals who compose it, or the partners, are taxable on their share on the partnership income, whether distributed or not. Na-receive man ng partner o hindi, okay, it will be taxable. Because in tax, it will be deemed distributable or constructively received. Now, in arriving at the net income of the general professional partnership, the rules on gross income and deductions of corporations shall apply. So the partnership may deduct from its gross income either the itemized deductions for costs, expenses, and losses, or the optional standard deduction, which is 40% of gross income. So that will become the distributable net income. That's gross income from a general professional partnership less the deduction. It's either the optional standard deduction or the itemized deduction to arrive at the distributable net income. Now, the distributable net income will be divided among the partners. It may be equally or it may be according to the partners' agreement. The one partner may receive 60%, the other partner is 40%, or vice versa. Or if there are three partners, if they will divide it equally, pwede rin ganon. It depends on the agreement of the partners. So now this distributable net income will be distributed according to their partners' agreement, and yan yung magiging share in partnership distributable net income. Okay? Then we add the gross income of the partners, their own gross income from different undertakings, less their own expenses or costs and losses to arrive at their taxable income. Now, if the partnership or the general professional partnership takes the optional standard deduction on its gross income, the partner should take the itemized deduction for costs, expenses, and losses on their personal income. A general professional partnership and the partners comprising such partnership may avail of the optional standard deduction only once, either by the general professional partnership or the partners comprising the partnership. So, isa lang dapat yung pipili ng isang klase ng deduction. So, kung ang pinili ng partnership is optional standard deduction, automatic si partners ang pipiliin na is itemized deduction on their income or taxable income. But if the general professional partnership takes the itemized deduction for costs, expenses, and losses on its gross income, the partner should take the optional standard deduction on their personal income. So, pag ang pinili ni partnership ay itemized deduction, dapat si partners ang pipiliin niya is optional standard deduction. In general professional partnership, hindi pwede na pareho yung klase ng deduction ng partnership and ng partners. So, kung ang pinili ng partnership ay OST, dapat si partner ay itemized deduction. Pero pag ang pinili ni partnership ay itemized deduction, dapat si partners should choose optional standard deduction. Take note that optional standard deduction is equivalent to 40% of the gross income. Okay, so let's have an example of a general professional partnership. So let's say AJ and Company is a general professional partnership with Althea and JCell sharing equally in the partnership net income or net loss. So ang agreement nila equally yung sharing ng net income. So dahil dalawa sila, 50-50 ang sharing. So in a calendar year, the partnership and the partners had the following income tax data. So for the partnership AJ and Company, the gross income is 1,200,000 and the operating expenses is 800,000. For partner Althea, her own gross income amounts to 700,000 and her own operating expense amounts to 400,000. While partner JCell, has a gross income of 600,000 and operating expenses of 350,000. If the partnership availed of the optional standard deduction, how much will be the income tax of AJ and Company? How much will be the taxable income of partner Althea? And how much will be the taxable income of partner JCell for the year? So let's solve the problem. Take note that the partnership form is a general professional partnership as stated in the problem. And we have discussed that general professional partnerships are not subject to tax. So the answer for number 1 is 0. Since AJ and Company is a general professional partnership, take note that GPPs are not subject to tax. General professional partnership. Next is to determine the taxable income of partner Althea for the year and the taxable income of partner JCell for the year. So let's solve for the taxable income of partner Althea. The formula will be share in distributable net income plus own gross income of Althea minus own itemized expenses, we will determine the taxable income. So unahin natin i-determine muna magkano ba ang share ni partner Althea dun sa partnership. So the gross income of AJ and Company is 1,200,000. Now, ang pinili ni partnership AJ and Company is to avail of the optional standard deduction. Sabi dito, if the partnership availed of the OSD. So, ang pinili ng partnership is OSD. Okay, when you say OSD, that is 40% of gross income. Pwede kang mag-deduct ng 40% ng gross income mo. So, 1,200,000 times 40% will be 480,000. So, 1,200,000 minus 480,000, yan na yung magiging distributable net income ng partnership. So, yan yung available for distribution sa mga partners. 720,000. Since there are two partners, Althea and JCell, and the agreement of the partnership is that they will share equally in partnership net income. So, we will just divide it by 2. So, therefore, the share of each partner will be 360,000. So, yan na yung share ni partner Althea, which is 360,000. Then we add the own gross income of partner Althea, which is stated in the problem, 700,000. Then we deduct the expenses. So sabi natin kanina, pag ang pinili ng general professional partnership ay OSD, automatic si partners ay itemized deduction. When say itemized deduction, kung magkano yung nakalista na expenses or operating expenses ni Althea, yun yung ide-deduct natin. So, according to the problem, ang itemized expenses ni Althea is the operating expenses of 400,000. So, therefore, the taxable income of Althea will be 360,000 plus 700,000 minus 400,000. So, taxable income amounts to 660,000. At yan yung magiging answer natin for number 2. Next is the taxable income of partner JCell for the year. So, again, our formula is share in distributable net income plus own gross income minus expenses equals the taxable income. So take note that the partnership chose OSD, so automatic, yung mga partners, itemize ang pipiliin. So kung magkano yung nakalista na operating expenses, yun ang ide-deduct. We already solved kung magkano ang share in distributable net income ng each partner. So, partner JCell will also receive 360,000 as share in the distributable net income of the partner. Then we add the own gross income of partner JCell. According to the problem, it amounts to 600,000. Then, we will deduct the own itemized expenses of JCell amounting to 350,000. So therefore, the taxable income of partner JCell will be 610,000. And that will be our answer for number 3. So take note that pag ang problem sinabi na general professional partnership siya, then it is not subject to tax. As long as na-meet niya yung tatlong criteria, which is they have common profession, and the purpose is to practice the common profession, and that there is no net income derived from trade or business. Okay, let's have the same illustration. Now this time, the partnership availed of the itemized deduction. So kung kanina, yung partnership nag-avail ng OSD, ngayon, yung partnership, ang pinili naman ay itemized deduction. So the same problem, nag-iba lang yung pinili yung partnership. Nag-itemized deductions siya. So, if the partnership avail of the itemized deduction, how much is the income tax of AJ and Company? And how much is the taxable income of partner Althea for the year and taxable income of partner JCell for the year? So again, since AJ and Company is a general professional partnership, the answer for number 1, which is asking for the income tax of AJ and Company, is 0. Because general professional partnerships are not subject to tax. So pag ang tinatanong how much is the income tax of the general professional partnership, always ang answer ay 0. Basta qualified siya as general professional partnership. So our answer for number 1 again is 0. Now next is the taxable income of partner Althea and partner JCell. So again, formula. So share in distributable net income plus own gross income minus, now this time since ang pinili ng partnership ay itemized deduction, automatic ang partners ay mag-OSD or optional standard deduction, which is equivalent to 40% of their own gross income. So, share in distributable net income plus own gross income minus own OSD to arrive at the taxable income. So, again, let's compute first yung share in distributable net income. So, take note that ngayon, ang pinili ng partnership ay itemized deduction. So, when we say itemized deduction, kung magkano yung nakalista ng operating expenses ng partnership, yun ang ide-deduct natin. So, unlike kanina na ang pinili ay OSD, ngayon, ang pinili ng partnership ay itemized deduction. Okay? So, gross income amounting to 1,200,000 minus the itemized deduction, which is indicated in the problem, operating expenses of 800,000. So therefore, the distributable net income of the partnership is 400,000. Yan yung available for distribution sa mga partners. Since there are only 2 partners and the agreement is to share equally in the partnership, so therefore, the share of each partner is 200,000. So 400,000 divided by 2 is 200,000. Then we add the own gross income of partner Althea amounting to 700,000. Now this time, ang pinili ng partnership ay itemized, so ang pipiliin ni partner ay OSD, which is equivalent to 40% of the own gross income. So 40% times the own gross income of Althea na 700,000. So, 700,000 times 40% will make you arrive at 280,000. 700,000 times 0.4. So, therefore, taxable income of partner Althea will be 200,000 plus 700,000 minus 280,000, which will make you arrive at taxable income of 620,000. And that is our answer for number 2. So next, let's determine the taxable income of partner J-Cell for the year. So again, our formula will be share in distributable net income plus own gross income minus own OSD equals our taxable income. So we've already computed magkano ang share ng each partner, amounting to 200,000. Now we're talking about partner J-Cell. We're computing for the taxable income of partner J-Cell. So we add the own gross income of partner J-Cell amounting to 600,000 minus own OSD, optional standard deduction, which is 40% of the own gross income. 40% times 600,000 or 600,000 times 0.4. And that will make you arrive at 240,000. So therefore, the taxable income of partner J-Cell will be 200,000 plus 600,000 minus 240,000. The taxable income of partner J-Cell is 560,000. So our answer for number 3 will be 560,000. So that is how to compute for the income tax and the income tax of the partnership and the taxable income of the partner. So once na ang pinili ng partnership ay OSD, dapat ang partners ay itemized. Pag ang pinili naman ng partnership ay itemized, dapat ang partners ay mag-OSD. Now, let's discuss general partnership other than general professional partnership. So, na-discuss na natin kanina how general professional partnerships are taxed. What are the income tax rules for general professional partnership? Now, we're going to discuss yung mga other partnerships, which is the general partnership in trade. Okay? A general partnership in trade or a partnership that is not a general partnership, professional partnership, is taxable as a corporation. Okay? So, we've already discussed how corporations are taxed in the previous chapter. So, kung paano ita-tax yung corporation, ganun din yung partnership in trade. Now, the share in the net income after tax or net income less income tax belongs to the partners. Now, the partner shall report his share as dividend income subject to final tax of 10%. Now, on his own or personal income, the partner may take the optional standard deduction at 40% of his gross sales or gross receipts or the itemized deduction for his own costs, expenses, and losses. Now, hindi na, in general partnership in trade, hindi na siya dependent sa kung ano yung pinili ni partnership na mode of deduction. So, in here, pwedeng ang partnership pipiliin OSD at yung partner pipiliin din OSD. Or pwedeng ang partner pipiliin itemized at si partner itemized din. Or pwedeng OSD si partnership, itemized si partners, or itemized si partners, OSD si partnership. So, it depends sa kung ano yung pipiliin nila. Hindi na siya mga partners, hindi na dependent yung pipiliin nilang mode of deduction sa kung ano yung pinili ni partnership. Unlike dun sa GPP, na dependent ang pipiliin ng partners sa pinili ni partnership na mode of deduction. And here, the partners are free to choose kung ano yung gusto nila, OSD or itemized, regardless kung ano yung pinili ni partnership. Okay, now our formula for the partnership in trade will be gross income of the partnership less the optional standard deduction at 40% or the itemized deduction for costs and expenses. So, pwedeng optional standard deduction or itemized deduction and will make you arrive at the taxable income. Now, since partnership in trade are taxable as corporation, so we will deduct income tax at 30% to get the distributable net income. So, unlike dun sa GPP na wala kang dinededuct na income tax, in partnership in trade, magdededuct na tayo ng tax bago ito i-distribute sa mga partners. So, this distributable net income will become the share in the distributable net income of the partners. Now, this share in the distributable net income of the partners will be subject to a final tax rate of 10%. Then, we will compute the own gross income of the partners minus their optional standard deduction or itemized deduction depending kung ano yung pipiliin ng partners to arrive at their taxable income. Take note that the share in the distributable net income is not included anymore in computing the taxable income of the partners. Hindi na siya kasali kasi yung share niya sa partnership in trade na distributable net income is already subject to final tax. So, nadeduct na yung tax pag na-receive na niya yung share niya. So, hindi na natin siya isasali doon sa pag-compute ng taxable income. So, ang pag-compute lang ng taxable income ng partners will be the own gross income minus their own deduction, which may either be the OSD or the itemized deduction. So, let's have an example. In here, we have AA and Company, which is a general partnership in trade with partners Andre and Alexia sharing equally in the net profit or net loss. The partnership and the partners had the following data in a year. So, for AA and Company, the gross income is 2,300,000 and its operating expenses is 1,400,000. For partner Andre, the gross income is 720,000 and operating expenses of partner Andre is 450,000. Now, partner Alexia has a gross income of 630,000 and operating expenses of 310,000. If the partnership availed of the itemized deduction, how much is the income tax of AA and Company? How much is the final tax of each partner on the share in the distributable net income? And how much are the taxable income of partner Andre if he chose itemized deduction, and the taxable income of partner Alexia if she chose OST for the year? Okay? For those na nagtatanong bakit may own gross income ang mga partners or own operating expenses, pwede kasi na yung mga partners ay meron ding iba't iba pang other businesses pa aside from yung share nila dun sa partnership. So, hindi lang yung partnership yung source ng income nila. Pwede na meron pa silang other sources of income. Kaya meron silang mga own gross income and own operating expenses. So, let's compute. So, first, we have to compute for the income tax of AA and Company. Since this partnership is a general partnership in trade, sabi natin, partnership in trade are subject to tax just like corporations. So, we'll have to compute for the income tax of AA and Company. So, the gross income of AA and Company amounts to 2,300,000. Ang pinili ng partnership ay itemized deduction. So, kung itemized deduction, kung magkano yung nakalista ng operating expenses niya, which is 1,400,000. So, that becomes the taxable income of the partnership. Now, since partnership in trade ito, subject na siya sa tax just like corporations. So, corporations are taxed normally at 30%. So, 30% times 900,000 will make you arrive at income tax of 270,000. So, yan yung answer natin for number 1. So, kung tinatanong magkano yung income tax ng partnership, the answer will be 270,000. Now, in order to get the distributable net income, kung magkano yung i-distribute sa mga partners, we will deduct the income tax from the taxable income to get distributable net income. So, in this case, 900,000 minus 270,000 na tax na babayaran, ang available lang for distribution to partners will be 630,000. So, since there are two partners sharing equally, dalawa lang naman sila, so we will divide it by 2. So, the share of each partner in the distributable net income will be 315,000. Our second question dun sa problem is how much is the final tax of each partner on the share in the distributable net income? Sabi natin kanina, if the partnership is considered a partnership in trade, any share of the partner in the distributable net income will be subject to final tax of 10%. So, therefore, the final tax of each partner will be 31,500. That is 315,000 times 10%. So, our answer for number 2 will be 31,500. Next is the taxable income of partner Andre. Okay, in this case, partner Andre chose itemized deduction. So, ang formula natin will be own gross income minus, since Andre chose itemized deduction, so kung magkano yung nakalista na itemized deduction or operating expenses niya to arrive at the taxable income. So, own gross income of 720,000 ni Andre minus itemized deduction of 450,000. Therefore, the taxable income of partner Andre amounts to 270,000. Take note that hindi na natin dito dinadagdag yung share dun sa distributable net income sa pag-compute ng taxable income ng partner under general partnership in trade. Okay, hindi na natin siya idadagdag yung share niya sa partnership kasi nga na-subject na siya sa final tax of 10%. So, nabayaran na yung tax nung share niya sa partnership. So, hindi na kailangang taxan ulit. Okay? So, hindi na natin idadagdag dyan sa pag-compute ng taxable income. So, therefore, the taxable income of partner Andre is 270,000 and that is our answer for number 3. Next is the taxable income of partner Alexia. Again, si Alexia, ang pinili niya ay OSD. So, dito, pwede natin sabihin na free ang partner na piliin kung ano yung gusto niyang mode of deduction. It's either itemized or OSD. Depende kung ano yung gusto niya. Hindi na siya dependent sa kung ano ang pinili ng partnership. So, again, our formula will be own gross income of Alexia amounting to 630,000. Since ang pinili ni Alexia ay OSD, that is 40% of his own gross income, 630,000 times 40%, that will make you arrive at 252,000. So, therefore, the taxable income of partner Alexia is 378,000. And that is our answer for number 4. Okay. Now, let's have another take on the problem. Now, this time, the partnership, kung kanina ay ang partnership ang pinili ay itemized deduction, this time the partnership AA and Company availed of the optional standard deduction. So, magkano na ang income tax ni AA Company, magkano na ang final tax ng each partner, and magkano na ang taxable income ng mga partners. Now, this time, ang partner ng si Andre, ang pinili na ay OSD, at si Alexia naman, ang pinili naman niya ay itemized deduction. Okay, let us solve. So, since the partnership availed of the optional standard deduction, so let's compute. Gross income amounting to 2,300,000 minus the OSD, which is 40% of gross income. 40% times 2,300,000. That will make you arrive at 920,000 OSD. So, therefore, the taxable income of the partnership is 1,380,000. Since this is a partnership in trade, it will be subject to income tax, which is normal tax of 30%. So, normal tax of 30%, 30% times 1,380,000, that will make you arrive at 414,000. At yan yung magiging answer natin sa number 1. Income tax of AA and Company will be 414,000. Now, in order to determine kung magkano yung i-distribute sa mga partners, taxable income of 1,380,000 minus yung babayaran na tax na 414,000, ang available for distribution na net income for the partners is 966,000. So, yan yung i-distribute sa mga partners. Since there are only 2 partners in this problem, Andre and Alexia, and sabi dun sa problem, they will share equally. So, we will just divide it by 2. So, therefore, the share in the distributable net income will be 483,000 each for the partners. So, Andre will be getting the share of 483,000 just like Alexia. But since this is a general partnership in trade, it will be subject to final tax of 10%. So, masasubject siya sa 10% final tax. Kailangan magbayad yung share niya ng 10% na final tax. So, ang babayaran ng mga partners dun sa share nila sa distributable net income will be 48,300. That is 483,000 times 10%. So, our answer for number 2 will be 48,300. So, kailangang mabayaran muna yung final tax na 48,300 or i-deduct na yan sa 483,000 para dun sa marireceive ng partners. Okay, so hindi buong 483,000 ang marireceive ng mga partners. Take note. Ang marireceive na lang ng mga partners na share dun sa distributable net income will be the net of tax. So, babayaran yung 48,300, i-deduct dun sa 483,000 para malaman yung marireceive ng mga partners dun sa share in distributable net income. Okay. Third, how much will be the taxable income of partner Andre if he chose OSD for the year? So, si Andre, ang pinili ay OSD. So, own gross income of Andre is 720,000 minus the OSD of 40% of 720,000 will make you arrive at 288,000. So, therefore, the taxable income will be 432,000. Again, dahil partnership in trade ito, hindi na natin idadagdag yung share nila sa distributable net income of the partnership. Ang isasala lang natin sa taxable income ng mga partners will be their own gross income and their own deduction. Depende sa kung anong pinili nila, OSD or itemized, to arrive at the taxable income of the partner. So, our answer for number 3 will be 432,000. Next is the taxable income of partner Alexia. Now, partner Alexia chose itemized deduction for the year. So, own gross income of 630,000 for partner Alexia. Since itemized deduction ang pinili ni Alexia, kung magkano yung nakalistang operating expenses, yun na yung itemized deduction niya. So, 310,000. So, 630,000 minus 310,000, the taxable income therefore of partner Alexia amounts to 320,000. And that is our answer for number 4. 320,000. So that is how to solve problems involving general partnership in trade. Now, the general partnership in trade will also file 3 quarterly and an annual income tax returns. Okay, so since ang general partnership in trade ang taxable na partnership, since ang GPP ay hindi naman taxable, the general partnership in trade is a taxable partnership and it must file 3 quarterly and an annual income tax returns. Okay, in which either the optional standard deduction or the itemized deduction for expenses are consistently taken. So kung ang pinili na do sa first quarter ay OSD, dapat for the rest of the year ay OSD na siya. Pero kung ang pinili ng partnership ay itemized deduction dun sa first quarter, dapat itemized deduction na siya for the whole year. Okay? So, yan yung ibig sabihin ng consistently taken. And the normal tax or the minimum corporate income tax when applicable is determined and paid. So, sabi nga natin dun sa corporation, pag 0 to 3 years pa lang yung operation ng corporation, it will pay the normal tax of 30%. Diba ang sabi natin, ang partnership ay taxable just like corporation. So, kung ang taxable partnership ay nasa 0 to 3 years pa lang ang operation, ang babayaran na tax is the normal tax of 30%. But beginning 4th year of operation of the taxable partnership, magko-compare na tayo ng normal tax ng 30% and the minimum corporate income tax of 2%. At kung ano yung mas mataas, yun yung babayaran. Okay? But a partner does not report his income from the partnership anymore. So sabi nga natin, hindi na natin idadagdag yung share niya. Share ng mga partners dun sa partnership, dun sa pag-compute ng taxable income ng mga partners. Because it is to be considered as dividends, which should have paid the final tax. Kasi nga, nabayaran na yung share niya, nakapagbayad na siya ng tax dun sa share niya, which is the final tax of 10%. So, just like corporations, a taxable partnership will also file quarterly and annual income tax returns. Yung deadlines nito ay pareho lang din dun sa corporations. Okay? So, that ends our discussion on tax on partnership. So, for the references, our discussion are based on the textbook of Mr. Rex Pangawan and Attorney Virgilio Reyes. So this ends our discussion on tax on partnership. So this is the end of chapter 5. Good day and God bless. So if you have questions, just feel free to send your message to me or send comments on this video discussion. Good day and God bless.